Good evening. This is Rob Sin. It's about 10 p.m. on the East Coast on the evening of Monday, August 14th. And I would like to discuss some charts this evening, taking a look at the major equity indices and then delving into some swing long positions that I'm currently on. So, some trades that I'm currently in. Um, Again, if you find value in this video or any of my videos, free content that I put out there, including blog posts, please subscribe at Goldfinger Capital on YouTube. You can follow me on Twitter at CEO Technician, or you can catch me and a lot of my blog content on ceo.ca at Goldfinger. So, starting out with the SPY, the S&P 500 ETF daily chart, and just keeping it simple. First interpretation is that this is a pullback, nothing more than a standard correction on the order of 4-5% from the highs. QQQ, NASDAQ pulled back a little bit more than the S&P, about 6% from high to low for the NASDAQ 100. The S&P 500, a little bit less, only around 4% of a correction from high to low. Looks like support has held so far. So about 4460 is the level on the E-mini S&P futures, corresponds to about 443 on the SPY. And that was basically tested on Friday. Today we were having, a small up day, pretty much low energy trading session until the final 30 minutes when bulls, decided to really bid it up. And we closed at session highs, 448.11 in the SPY, up 0.55%, 55 basis points on the session. And just the way that the action has been feeling the last few trading sessions, it feels like the correction has come to a conclusion there on Friday. It just felt like bears couldn't push the market any lower on Thursday and Friday, and buyers started to step in and accumulate. Now, I will throw in one caveat here. It is mid-August, and you can see the volume bar down here. Pretty light volume trading session, and I expect that to be the way it's going to be for the rest of the month of August. In fact, as we get into the late August, the final days of the month, I wouldn't be surprised to see some really low volume days, like even less than 40 million shares on the SPY. It's just a lot of people go on vacation. The desks clear out as August wears on, and everybody wants that 4 to 5 day, Labor Day weekend instead of just a 3-day. A lot of people clear out their desks on Thursday ahead of Labor Day and take that 5-day weekend. So I feel like the correction has come to a close there, just as bearish sentiment has ticked up a lot in the last week. Just going through Twitter, a lot of accounts, heavily followed accounts, have turned bearish. Even people that were bullish a month or two ago are now bearish. And the bears, the actual bears, are now calling for a market crash, telling us that we're effed, et cetera, et cetera. I don't know. I just don't see that in the charts. I feel like this has been a hated rally in 2023. And what better to have that hated rally continue into the fall. The XLF, so the financials, this was the sector that was supposed to be the worst sector this year. Remember what happened back in March. Everybody dumped financials. Everybody got out of regional banks. Even JP Morgan came under heavy selling pressure in mid-March. And now we've climbed back into the green year to date in the XLF. And frankly, this little pullback the last few weeks looks like nothing more than just a bull flag. It looks like a very healthy bull flag setup here in the XLF, and really, this is the sweet spot where you'd want to think about going long a chart like this. It seems like this bull flag is right here in the sweet spot. We got a golden cross here a couple weeks ago, actually last week, 50-day above 200-day, and both moving averages are sloping higher. Relative strength index. I mean, in fact, everything that I like to look for, that I look for a bull flag long setup, is in this chart. You're pulling back to the median line and the daily RSI 14, and you've got this golden cross, with the moving averages sloping up. It's a high and tight bull flag. So again, as much as I love to just be bearish and say the market's going to crash, I just don't see it in these key charts. So now let's talk about trades, swing long trades. I'm in MNMD here. Again, if I'm talking about a trade, especially a swing long trade, not an investment long, I could sell tomorrow morning. I could sell a week from now. I'm flexible. Okay. So I may be in or out of any of these charts, and I may not update it, with a new video. So please do your own due diligence. And this is not investment advice. This is not trading advice. I'm just talking about what I'm doing. MNMD, I like this chart setup. I like this bottoming pattern it's put in over the last year, and a series of higher lows and higher highs. This is the definition of an uptrend here since the beginning of 2023. So as obliterated as this stock and the medical psychedelic space was in 2021 and 2022, in 2023, this is actually in an uptrend. And frankly, it's up about 100% in 2023. So this is actually a great performer this year, much different than its performance in the last 2 years. But we're here now, a new moment in time. This is an uptrend. This is a well-formed, broad-based bottoming pattern, and we have very key technical levels. $5 is obviously a key upside level. Above $5, you have this wide open gap that leads back to last September. Gap filled just above $6. I think it's actually $6.12. So, what is that? 35% above today's closing level. So there's a lot of upside potential here in this chart. And obviously, the $4 level is a big round number, but it's also the 50-day moving average. And it's also a key reference point dating back to April and last month as well. It proved to be support. So we have clear levels on the chart that we can use to help guide us. So MNMD, I am long of. Turning to precious metals, silver, gold, sentiment is really very depressed on the precious metal space. The daily sentiment index for gold is at 16 as of today's close. For silver, it's 25. And I don't have a daily sentiment index for gold mining stocks, but I do have a lot of people that I follow. I have a pretty good feel for the sector. I've got my pulse on the sector, and it feels like sentiment in gold mining stocks is even worse than it is in gold and silver. So this is a very depressed, very hated sector. And silver has come back down to support around 2240 to 2250. This is a key support level. It's pretty oversold here on the daily time frame. Zooming it out to the weekly, you can see price memory here, 22 to 2250, big price memory in silver. And you've got confluence of these moving averages, the 50-week, the 200-week, both sloping up right around the 2250 level right now. So you've got a lot of confluence here near today's low. Very weak sentiment. So this is a sort of a contrarian trade here to take a long position in silver. Right now, it's down 4 weeks in a row. If it falls this week, that'll be 5 weeks in a row down. And silver has seasonal tailwinds in August that stretch into mid September. So this is a pretty juicy setup here to sort of fade the crowd and take a contrarian long in silver. I could say basically all the same things that I said for silver, for gold. Uh, Down 6 trading sessions in a row. You can see the futures right now, we're at 1937.30, so falling even further in Asian trading. And this is a 30-minute chart. You can just see the moving averages. I mean, this is a very clear downtrend in gold on multiple time frames. And it doesn't get much clearer than that. 30-minute, 2-hour, daily, downtrend, downtrend, downtrend. Yeah, so either you just stick with the trend and say, gold and silver are going to continue to grind lower, might need to come down to 1900 and test that 200-day moving average. Certainly plausible. Take the other side of that and say, well, sentiment is really very depressed. This is getting pretty oversold here, and it's setting up for a sort of seasonal rally heading into Labor Day. And also, the US dollar index might be getting a bit overbought here as it runs into the 200-day moving average from underneath. Look to the left on the chart. 103.30 to 103.50 is key resistance dating back to the end of last year. But again, it doesn't have to go up at all. This could continue to grind lower. The recent trend could stay dominant, and really the 1900 level in the gold chart is a much bigger area of support than where we're at right now, 1935, 1937. If gold does start to catch a rally here and turn up, the big upside levels will be 1980 to 1985, and then obviously that 2000 $2005 area that was key resistance the last few months. One thing to add to gold is that the implied volatility index, the GVZ, for gold options. So this is implied volatility in options on the gold exchange traded funds traded on the NYSE. And basically, what this is pricing in is some of the lowest implied volatility in several years. So the market doesn't think that gold's going to move much above 2000, or it's going to move down under the 1880 area at any point in the next 30 days. So that's a pretty broad envelope, over $100 an ounce. But gold has quite a track record of making 50, 60, $70 an ounce moves in a day or two. It seems like the market is a little too lackadaisical here, that it really is not counting on much volatility in precious metals. And I just have to think that with everything that's going on in the world today, including the fact that Fed Chairman Powell is going to be making a big speech next Friday at the Jackson Hole Fed shindig. You have China starting to pump stimulus into their economy to try to counteract a major slowdown that's been taking hold over there. Who knows what's going on in Niger with this potential natural gas pipeline that might be stopped essentially because of the coup d'etat in that African nation. And then, of course, Russia and Ukraine, right? There's just a lot of hotspots in the world. And gold implied volatility being at 4-year lows seems like a sort of a contrarian opportunity to, take advantage of the potential for more volatility in the gold price over the coming weeks. The GDX, big technical support at the $29 level on a weekly closing basis. $29 is really a big level. Today we closed at $28.95. You can see the hammer candlestick there, and there's clearly some bottoming tails here in recent weeks, just under $29. But this is now really shaping up to be a make or break week for gold miners. I mean, it's time to catch a bid here and slam the door shut on a potential bear trap. I mean, this would be such a juicy bear trap here if the gold miners caught a bid and drove up above $30 to end the week. I am in some GDX short dated call options at the $29 strike and the $30 strike. This is really high risk trading, short-term trading, so not for everyone for sure. But the $30 calls that expire at Friday's close, they were trading for about 7 or 8 cents this afternoon. So not a lot of risk there. You can lose 7 or 8 cents if you buy 100 contracts. You can lose $800, but you're taking a shot, or I should say, I'm taking a shot at what happens if we move back above 30 later in the week, Thursday or Friday. Those $30 strike calls could be trading 50, 60, 70 cents pretty quickly. And then sort of, you're getting an 8X or a 10X payoff on my 7 or 8 cents option premium that I paid today. So the GDX, I believe this is worth taking a shot at a bear trap here this week. Obviously, if it doesn't play out and we close under 29, it's not a good look for the GDX. AEM, which is Agnico senior gold producer, down 1.9% today. And this has just been a pretty weak stock so far in the month of August, but $48 level. This is continuing to hold. And so just like I said for the GDX, goes for AEM. It's 29 in the GDX. It's 48 in AEM. These are big technical levels. Opportunity to spring a bear trap if buyers can step in here and generate a rally. But really, we need to get this back above $50 pronto, or this is at risk of breaking down and maybe coming down into the support from February and March near 44. IAG, I am gold, mid-tier gold producer. Just look to the left on the chart, 220, big support level. You can see it as clear as day. The low of the session today was 225. So I like this sort of buying the blood, contrarian long at major long-term, support level in the 220s. At the very least, I think this can catch a 10% bounce up to 250 to 260 area. Though longer term, we must be mindful of the potential that this is forming a head and shoulders top, left shoulder, head, right shoulder, and the neckline would be at 220. If that neckline broke, not good. We'll be looking for a move back down to those 2022 lows. So there's a lot going on in this chart. It all depends upon your time frame. Shorter term time frame, this is pretty oversold here in IAG, and it's at a key support. It's at a key area of support. I would say at least a rally back to back test the 200-day moving average is likely here in the near term in IM Gold. Natural gas. This is a beautiful bigger picture chart. So let's just take a look at this, zoom out. Big bottoming pattern here taking hold in 2023. So multi-month bottoming pattern. And we're knocking on the door of a breakout at $3. You can see key resistance. In fact, you know what? Let's pull up it on this platform. It's just easier to look at on stock charts. Yeah, there it is. So there's that rounding bottom pattern in natural gas. $3 is the breakout level to confirm this 7-month bottoming pattern. And a breakout above $3 would project quite a bit higher. I'm not going to throw out an exact upside target, but you're talking about 15 to 20% of further upside potential at minimum, and potentially much more. And what's also interesting about natural gas is even though it has been moving higher for the last couple of months, making higher lows and higher highs, sentiment is still very depressed on nat gas. So this is the kind of setup that I really like to see, where you have improving chart technicals. Some would argue you have improving fundamentals. You have the potential for a major gas pipeline stretching from Africa to Europe being, shut off, or who knows what's going to happen there in Niger. And yet investors are not bullish at all on natural gas. They continue to talk about oversupply, blah, 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 blah. I like this trade on multiple time frames, and I am long natural gas futures. Finally, gold. Again, this is a very clear downtrend on multiple time frames. Just looking at this 2-hour chart, it doesn't get much nicer than this one in terms of downtrends, where you have just every rally failing and making a lower high and a lower low. But at some point here, it's going to find some support. And actually, if you pull it out to a 4-hour and you zoom back to about 6 weeks ago, 7 weeks ago, there was a lot of time spent forming a bottom in the low 1900s. And it was this bar exactly 1 month ago where there was a breakout above 1940 that eventually led to a much further move to the upside. So here we are. We're right back to that breakout area from about a month ago. This is a very logical area for gold to find support. But again, it remains to be seen whether or not gold will actually catch a bid here. We'll find out, right? So long AEM, which is Agnico Eagle, long IAG, I am gold, mid-tier gold producer, long MNMD, Mind Medicine, and long natural gas futures for a trade. And some GDX call options. So there, I'm throwing out 5 trades I'm in. So those of you that are haters can root for me to go 0 for 5. No, I'm just kidding. It will be interesting to review this on Friday or Saturday and see how things played out in these trade setups. Again, this is not investment advice. This is not a recommendation to buy or sell anything. This is purely entertainment, and I'm just talking about what I'm doing. Have a great rest of your evening, and hit the like button or subscribe, or hit the subscribe button to my YouTube channel. Thanks a lot.